We have some important movements lately in the market, especially this week, and we're going to have a look at gold prices, oil, and dollar yen. So welcome back to this midweek technical look, and let's have it start with gold prices. So we can see that the market is easing somewhat after it recorded a fresh all-time high around the 2,882.36 in yesterday's session, with the immediate support to the downside coming from the previous peak at 2790 and this steep short-term uptrend line. If there is now a drop beneath this line here, then it may find next support at the 20-day SMA at 2757, ahead of this region here of 2720 to 2730. If the bearish correction continues, then the market may return back to this trading range and the 50-day SMA at 2687, ahead of the long-term uptrend line at 2670 and this area of 2655. On the other hand, if the price continues the upside structure, then it may find immediate resistance at the 2900 psychological level, ahead of the 161.8% Fibonacci extension level of this down leg here from the peak in October of 2024 to the low in November of 2024 at 2945. Looking now at the technical oscillators, the RSI is pointing down in the overbought region, but the MACD is still strengthening its positive momentum above its trigger and the zero lines. However, we can see that the market is losing some steam, especially in the RSI, suggesting that we may see a potential downside movement. Now, as long as the market remains above the 200-day SMA, which is holding near the 2535 support, then the outlook remains positive. Switching to oil prices, we can see that the market returned back beneath this long-term descending trend line and near the 71 area. So also it holds beneath this SMA, so the outlook for now in the short term is bearish. If there is a drop beneath the 71 level, then the price may challenge again the 6870 support and even lower the several tested in the past 67 round number. Now a drop beneath this significant area, then it may challenge the 65.70 support, which is also the 17-month low. A drop beneath the 67 level, it will also endorse the bearish outlook. On the flip side, if the market returns higher and also have a closing session back above this downturn line, then it will meet the 50-day SMA at 72.50, the 200-day SMA at 74.70, and the 20-day SMA at 75.50. Now a move above the 76.45, it may help the bulls to also have a test of the 6-month high of 80.59. The MACD oscillator is holding beneath its zero and trigger lines, suggesting that we may see some more negative momentum, and the stochastic is ready to cross beneath the 20 level, suggesting also that we may continue the downside movement. Also, having a look at dollar yen, that is flirting with the 200-day SMA around the 152.75 area. We can see that if the market remains beneath the 200-day SMA, it will endorse the bearish correction in the short-term view. So to the downside, the first support is coming from the 151.10 ahead of the 158.60. Now, if there is a climb back above the 200-day SMA, then the next resistance will be the 153.65, this short-term uptrend line, and the 50-day SMA around the 154.77, the 20-day SMA, which is also holding near this long-term uptrend line at 155.50, and also the highs here of 156.70. Now, to confirm the bullish structure in dollar yen, we have to wait to see another challenge of this area here of 158.60 and the 6-month peak at 158.86. The RSI is standing beneath the neutral threshold of 50 with some weak momentum. However, the MACD oscillator is strengthening its negative movement beneath its trigger and zero lines, indicating that we may see some more losses in the market. So the key level here at dollar-yen is the 200-day SMA, if the market will continue to hold beneath it or if we're going to have a surpass it anytime soon. That's all from me. Thank you for watching and have a great day.